Ever wonder why some traders consistently win while others keep taking losses, even when they're looking at the same charts? The secret is simple: mastering high probability setups and knowing exactly when to enter and exit a trade. And that's exactly what we're covering today. We're diving deep into the smart money concept, breaking down the key criteria for spotting high probability setups, and more importantly, how to filter out risky trades that can hurt your success rate. But that's not all. I'll also show you different entry and exit strategies, the pros and cons of each, and how to make smarter decisions in the Forex market. We always appreciate your support, so please give this video a thumbs up and subscribe to our channel if you are new.
What we can see is I was looking for a buy. I even have the entry models that I'm looking at for those particular areas. I have my trading ranges set up on the 4-hour and the 1-hour just to really call out what I was looking at, as well as the premium versus discount areas. So what I did once price came into this area, I got my alert once price tapped in here. This was at 3 in the morning. I haven't been trading London recently. I've been favoring my sleep schedule and trading New York more recently, and it's been a savior to my own well-being. So it's something that I'm starting to focus on a little bit more. So I didn't take the entry here, but I had a few people that questioned why this entry didn't work and why I didn't take it. One reason, obviously, I was sleeping, so that's why I didn't take it. But the biggest thing was what I spoke about a little bit earlier on Aussie US dollar, and seeing that price taps into the block, but doesn't really tap into it very deeply. As you can see, we tapped into it, then we ran to the upside, breaking structure. This is a really nice impulse, mind you. So if you were looking at or did take buys at this point, this order block right here, there is absolutely nothing wrong with that, because this is a clean move overall. We can see that that's a solid impulse. And if I go to the 15-minute and just move back to here, we can all agree that this is a solid impulse. The only issue is on a 15-minute chart, we haven't actually broken any clean structure. If I just look at this, the trading range we'd be trading in would be more so something like that. We didn't break structure to the upside. This is a more or less minor structure point, if you will. So that is one clear thing. And of course, on the 5-minute and 1-minute, we did break structure. So we did get the valid criteria of the risk entry. You can see we had this point, we broke this point, we went to the upside, we created that order block, and then we did get a little bit of a reaction, but more or less would have been taken out by these wicks right here. And this is why when you are looking to take trades, sometimes taking that confirmation entry within a confirmation entry makes a little bit more sense, or is a little bit safer, or will help improve your strike rate essentially, because this would be the risk entry within that higher time frame point of interest. Of course, this is what we would call a confirmation entry, but this is a risk entry within the confirmation entry. And we can take that as our first entry. We'd be looking at something like that. But what we could then do is just wait for this point. So we've broken structure, we've formed another point of interest, and we've looked for that to take long. This is the more safer entry. This is the more risky entry. And in this case, we didn't get the confirmation entry because price did not move to the upside and break structure. So that's something you can do when price taps into a block more shallowly. As we can see here, is instead of taking the risk entry, look for the confirmation. I keep saying that. We're looking for the risk entry of the confirmation entry. So the confirmation entry is the reason it's a confirmation entry is because we're looking in a higher time frame order block, the 1-hour and the 4-hour, and we've dropped down to the lower time frame. We've seen that shift in market structure. We haven't actually confirmed that this is a bull trend until really the second break of structure, because like I had mentioned in the entries video, what this could have been, this break of this high right here, or this move to the upside that breaks this high rather, this could just be a take of liquidity that forms a FU candle to then trade lower basically. So something to keep in mind. So the safer route when it goes shallow would be to take it at the confirmation within a confirmation entry, or the safer entry, whatever you want to call it. Not really great with names, so this is what we got. But basically, if you take that second entry, this would have avoided the initial loss, whether you took it on the 5-minute, whether you took it on the 1-minute. If you were waiting for that confirmation entry, as you can see, we didn't actually break structure to the upside. We would have been trading within this range, and we ended up just breaking structure to the downside, so we wouldn't have gotten this second confirmation entry. Another thing to also take note of, and this is also another reason why when I looked at it, I also kind of had that feeling that we probably wouldn't get a confirmation entry, because of course, when we look at something like this, if I just take this back, we look at this, we can see that clean impulse. You know, we would have, say, our order set on this order block. You know, we're going to take that risk entry because it looks good kind of thing. Price comes down, we get tagged out. You know, we're a little bit annoyed, but we're going to take that confirmation entry. That's fine. We haven't actually broken structure, so we're waiting for this structural point to break. When price starts to do essentially this is what prompted me to start to revisit or look at this trade and say, maybe this doesn't make sense. This is around 6 a.m. So this is actually when I was looking at charts in bed, but we can see, what are we doing? We are creating equal lows. We can see that on the 15-minute chart. It's a little bit unclear on the hourly chart. You can see more consolidation. We can see on the hourly chart, and this might induce people to want to buy, is looking at, you know, this wick that comes into the block. We can get this retrace candle. We come back into the block and basically keep pushing lower. But if we're looking at the 15-minute chart and even the 30-minute chart, we can see equal lows, you know, this overall support zone, if you will, being formed. Even if I drag that over just a little bit, I'm doing this on the fly, I don't actually know. It's a reach, but you have resistance, resistance, support, support, support. So manipulation of that zone. What does that mean for us? We'd be looking at this as sell side liquidity. So when we're factoring all that in, that also gives us a little clue that price is probably going to dip lower to take the liquidity. And that is effectively what price actually did, as we can see. I'm not really sure what, oh, that's the entry that I put on. Confusing myself here. So let's take off the replay and we'll just look at the trade in itself. So I got to my desk around, it was about 9 o'clock when I was actually at my desk. Before that, I was just looking at price action on my phone. So if I just take price back to here, so what we can see, I'll get rid of that too. Now what we can see when we're looking at this bit of price action is price came down, we created a low, we've broken that low right here, which meant that our high would have been right here. We can see that we've just barely broken that high. So our new trading range would be something like this. And what we can see is we do get that break to the upside. And this is where we got to use our initiative and kind of look at price action. So I'm just going to move this a little bit closer as well. So when we're looking at this, price broke this high. How did we break it? We basically broke it and immediately pulled back. This is not really a strong break of structure in my mind. What did we do immediately after that? We broke structure to the upside. So we can look at this point as our low, or again, depending how you look at it, we can use that point as well, but let's just use this clear bit of structure. It gives us the same ending kind of result. So we've broken that structure to the downside. If you were looking for an order block, you might look at this point, but one candle looking at this succession of poorly broken highs would not give me the best or warm fuzzy feeling to look for a buy. In this case, I want to see a little bit more commitment and I want to see a little bit wider trading range. I want to see that volume is being pumped into the markets essentially. And when I see this, we have this high that gets broken impulsively. It leaves a lot of imbalance. So what I did was I set an order right here with a stop just below this wick right here. So I had my stop loss underneath this wick and was looking to take the entry long. This would have been, again, the risk entry. We have a nice break of structure. We haven't actually confirmed that we're in a bull trend again because we have broken to the upside, but we were still showing a downtrend. But I was willing to take that risk because we are deep within the block itself. And what we can see, what does price do? It just kind of hangs out a bit. It gets very close to tagging in, but did not tag in, and then continues to move to the upside. So what I did at that point was I looked at this point of interest. This was my next order block, my next entry area that I was looking to take a long at. Just put that right there. In this case, I had my stop just underneath the block because if I did this, then I'm basically saying if price comes down this way, it's more than likely going to tap into this. So the more logical place at that point to put my stop loss would probably be way down here, which there's no big deal of having a 7.5 pip stop loss, but I basically just decided that that wasn't the case for me. And if I just keep playing price forward, move this out of the way, you can see that price then breaks structure again to the upside. This is where I pulled my order, and either way it wouldn't have gotten tagged in. to the trade, and price began moving to the upside right here. And this is where I started to look at it in a couple different ways. Started to see that price is running away from my entry on the 1 minute chart here. We have reasons for price to come back down to this side. We can see that there is a small bit of imbalance here, but I'm starting to see price move away quite rapidly. I want to take a look at what is the 5 minute showing me. This is ultimately what convinced me to take the trade or base my trade on. So I seen that price has broken structure on the 5 minutes. So what we can see if I just look at this is our trading range is here. And then I took this on the substructure using and factoring in the 1 minute. I also want to add that because obviously the clear structural point from the 5 minute would be either here or right here, or you can even use this point, which is the 15 minute high. So we'd be trading within this range. We haven't actually broken structure to the downside on the 5 minutes. So of course, anything that's happening right here is substructure. And that's how I built the trade. So I just wanted to get that out of the way. I'm using the 1 minute, understanding the fractal nature of the markets and that it's going to build in the 1 minute before it builds in the 5 minute. And I seen price action breaking a high within the substructure. So I seen essentially this break of structure right here. Our risk entry could have been right here if we were looking at the 5 minute. Then what do we get? Another break of structure. It forms an order block right here. This is the down move candle before the up move that breaks structure. It leaves imbalance, so it has all the criteria. And even if I'm just looking at it from a refinement perspective as well, this would be the down move candle before the move that breaks structure. And what we can see is price taps into it, or so it appears based on this 5 minute time frame. So we can actually just refine it to this candle. And that's ultimately what I did. So I set my entry right here and I put my stop loss just slightly below. It was a 6 pip stop loss at the end of the day. And what we can see is I actually set my order once we broke this swing high as well. So actually I'm forgetting my trade already, but price broke this swing high. So I actually got a clear break of structure that then prompted me to set my order. It wasn't actually that previous candle, but I was looking at this minor structure breaks before I framed up the trade and then started to build essentially this price action model. So what we can see is here's our order. We didn't get tapped here, but we did right here. It was actually a really nice fill. Once price broke this high right here, I moved the trade to break even. And once we broke this bigger structural point, which is the 15 minute swing high, so we can see we broke structure here. This is our trading range within the 15 minutes. So once we actually broke that structure, I was using it on the 5 minute chart, but we can see that price does move back to the upside shortly after. But I, again, was using that as kind of more of a partial target versus a definitive break and close above on the 15 minute, just using it. Yeah. So as price tapped into that, I took a quarter of my position off, left my trade at break even, and just let the trade play out a little bit more. I thought I was going to get stopped out here. I was ready for it, to be honest. I think I even posted that in the GU chat because I had noticed that this could also be a point of interest. You know, we broke this structural point. Once we broke this high, we created this high, we pulled back, and then we broke the high. So this is a potential point of interest. This is an entry area that we could be looking at here on the 5 minute chart. And that was totally fine if I got stopped out. I took a little bit of profit. I paid myself a little bit. And if I got tagged out, no big deal. One thing I was also questioned about is why I didn't trail underneath this low to give that little room for price to tap into that. And that's totally valid. And that's something that maybe makes more sense going forward. But based on my trading plan as it is right now, once price breaks structure on my entry time frame, I move to break even. Something I may start to test a little bit more and integrate into my trading plan is if a point of interest exists and I've taken partials instead of moving to break even, I keep my stop loss slightly below that. So I'll take a smaller loss. And if you factor in partials, it would probably not be a loss at all, depending on the R value of the move that broke structure. So that is something I'll definitely look at in the future, but not something I did for this particular trade. And what we can see is price then moves to the upside. It breaks structure one more time.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all free TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I entered the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.
And I partialed out another quarter of my position at this 5-minute break of structure. I was being aggressive with this one only because it's Friday. I wanted to get in and out of the trades. I don't personally like to hold trades over the weekend if I don't have to, especially with coronavirus, Biden taking the reins for the US dollar, Brexit, anything that has happened in 2020 and 2021, holding positions over the weekend is just not something I want to do. If price gaps, I just don't feel like dealing with that. So that's why I managed as aggressively as I did. And what we can see is price then pulled back. So partialed here, I partialed right about here. So almost at the extreme highs before the pullback. Was nicely timed, and price then pulled back. And once it broke that high right here, I had moved my stop loss just underneath this swing low here. And then as I was looking at price action, and I moved up to the 15-minute as well, which is also why I moved my stop loss to this point. But I also wanted to be a little bit more aggressive. I took some partials in and around this spot as well, and decided to move my stop loss just below this more or less small swing in price. It is a swing low on the 15-minute chart, and on the 5-minute chart, it is a little bit of a pullback. It's not the cleanest, but it's just where I put my trade. It was about right there. And what we can see is price then came down and tagged me out of the trade. So altogether, with the 3 partials out here, and was, I think right here, I partialed out the last little bit. I was able to secure 4.1% on this trade, which was a great trade. The duration of the trade was about 5 hours, which was not too bad. 4 hour in 5 hours, I'll take it on a Friday. So that was the trade. That was the reason that I took it. That's the reason why I didn't take it right here. I was sleeping, but also a couple other reasons that we've talked about. And really, one last thing to highlight was just how on point the entry model really was for this particular setup. We had, this substructure break, risk entry here. There's your confirmation entry, risk entry, confirmation, risk entry creation. There would be the risk entry, actual entry, confirmation entry creation. This would be the confirmation entry, which is exactly that point right there. Let's clean that up. And what we can see is price basically did this. This didn't quite come to give us a risk entry, so not really a big deal. But what we can see is that's the entry model that I took. If we look at it on the 1 minute, we can just look at it a little bit cleaner. But I didn't use the 1 minute for this trade once I actually entered it, but I used the 1 minute for the substructure to then take me to the 5-minute structure to look at something a little bit cleaner. And once I'm starting to see the momentum here on the 5-minute chart, basically reading between the lines to understand what makes sense on how to enter, things like that. So we'll just play price forward a little bit more. And as we can see, we just started to see a more clean pullback, or really nice retrace, about 14, 15 pips. And this is where price currently is. And that's so simple, really. You can keep it. The price tapped into the zone, the point of interest, and then I looked for my entry model, my entry criteria, and that's what I used to take entry. If I go back here, you can see that this was effectively the model this is the model that I shared in the entries and management channel on Discord, and this is exactly what I traded. So it's just really keeping it simple and using the confirmations, using higher time frame points of interest to take lower time frame confirmations and actually take trades, and really just looking at that from a structural perspective. Structure was what gave me the clues to take the trade long, and I was pretty aggressive with the management of this. Of course, if I kept my management under the 15-minute and this clear 5-minute swing low, I would still be in the trade. But again, I was not looking to hold this trade over the weekend. Another thing that made me trail this trade a little bit higher as well is if we just look to the left, we also have an order block right here. This order block, you can see that we have equal lows right here that we spoke about. price came, we broke structure here, and this was the extreme point. And we can see we even have a slight little order block here. We broke this structural point imbalance. So a series of mitigations for price to come lower anyway. So once we tapped into it, we can see that we just tapped into it, and that's what caused the violent sell-off. So we can still see that the bears are still in the markets. We have equal highs here. We have some equal highs here. So we could see price tap back up into this area, look for sells. We might get another buy in this area, but that's, for me, showing a further reason for entry for prices to trade lower. So looking for a sell within that to trade more down here would be the ideal route at this point, and something that I'm going to be waiting for. But we still have, 130, 140 pips to get to that point. But once price comes down, and if it comes down to this point of interest, this is exactly what I'm going to be looking for. Whether I take the risk entry or the confirmation entry will be dependent on price action and what the market provides. But I hope the breakdown of this pound US dollar trade was insightful and gave a couple valuable lessons on the entry models, and really just showcasing how I have been breaking down charts from a top-down analysis and, effectively looking at the intraday higher time frame, framing up those points of interest, and then executing on the lower time frame using the entry models that I've provided.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all 3TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I entered the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.